Efforts to limit global warming are focused on achieving net zero emissions of greenhouse gases by 2050. And eliminating those emissions will require enormous levels of investment in clean energy technology and infrastructure. And that transformation will have a major impact on investment portfolios. So, what role will investors play to combat climate change? And which investing strategies present the most gains for investors and the planet? Joining me to discuss all this is Bruce Usher. He's a professor at Columbia Business School and author of the book, Investing in the Era of Climate Change. And Bruce, it's so great to have you here. And I want to just talk a little bit about where we are right now, because as we've seen, a recent rise in some of these extreme weather events. There's some really interesting numbers coming out from Pew and from Harvard. Almost 2/3 of Americans have personally experienced some sort of extreme weather event just in the last couple of years alone. And how have these personal experiences really impacted the approach to ESG from the perspective of investors and business leaders?
What I would say is that in the area of climate change, we're seeing four trends that are really affecting investors. And the first and most obvious of those is what we call the manifestation of these physical risks that are becoming apparent. As you point out, 2/3 of Americans are experiencing it in some form or other. And that's starting to change people's way of thinking about climate change and what's happening here. So for investors, as they start to see these physical risks manifest themselves, they start to think about how does that affect companies? How does that affect business? How does it affect my investments? And that's essentially what ESG investing is. There's a lot of confusion at the moment around ESG, a lot of arguing about what this is all about. And I think there's a fundamental misunderstanding here. ESG is really very simply a more advanced form of fundamental analysis in making investments. It's incorporating additional factors on top of your traditional financial analysis. I like to use this as a very simple description. If you were about to buy a house, and you sort of ran the numbers in the house and your mortgage and all the numbers you think about buying a house. And then when you looked at the house and you thought, I wonder if this house, there's storms, there's a flood. Well, let me go check the basement. Let me go see, is the basement wet? Is there flooding? How often? You would ask the seller, how often does that happen? Is it happening more often? These are the sort of things you want to know about your asset. Well, it's the same in stocks. If we're picking stocks, we want to know what sort of environmental factors like climate change, like flooding resulting climate change, is likely to affect the value of that stock. It may not. There may be no assets at risk from that factor, from the physical factors. There may be a risk from other factors. For example, we call transition risk around climate change. As industries change, think automobiles, right? The automobile industry is changing from the internal combustion engine to electric vehicles. That transition creates risks for certain companies, incumbent auto companies. So the real issue here around climate change, these rising physical risks, they're becoming more apparent. And as investors, we need to understand how's that going to affect our investments in the future.
I really liked how you talked about how this is complementary to fundamental analysis when you're looking at these companies and stocks. And how do you see these trends then filtering down and changing the finance and business industry? Because it does seem with a lot of these ambitious policy goals that there's going to be a huge shift.
It is going to be a huge shift, and it's going to be a huge shift for a couple of reasons. One is the physical risk we just talked about, right? But there's a couple other big trends out there. One is changing social norms. So you see employees, particularly more younger employees, they're looking where they want to work. They're showing a marked preference. They want to work for companies they view as sustainable. We're seeing consumers saying they want to buy sustainable products. And these are backed up by a lot of research. These trends, they're very real. In fact, when I talk to business leaders, they point specifically to them. We see governments taking action, the Inflation Reduction Act and other acts that are accelerating these trends. And then the fourth trend, the one that is the biggest impact on businesses and investors, is the area of innovation. So we're seeing an extraordinary number of products coming out that are not just innovative, but competitive with incumbent products. And the most obvious one is renewable energy. So solar and wind today are, in many parts, if not most parts of the world today, the cheapest way of generating power. They're a better product. And when consumers buy power, it's a commodity. They don't really care the source. They're going to buy it from a cheaper source. And this is where innovation is really making a difference. So your question of how are these trends affecting finance and business and investors? A couple of years ago, Larry Fink famously said there's going to be a reallocation of capital. And what he was getting at here is that investors are starting to move capital from more traditional industries into some of these newer sectors, or within the sector, finding the companies they think are going to dominate in the future. And we're starting to see that play out. We're starting to see investment capital moving from more traditional automobile companies into companies with leadership in electric vehicles. We're starting to see in the energy sector companies that are dominating in renewable power, showing much greater growth in both market share and value. So that's changing the financial industry. And then what's happening within the industry, unsurprisingly, is you're starting to see some real specialization. Right? Not all investors are taking the same strategy. We are all starting to understand the issue, which is climate change, and how that's going to affect investors in the years ahead. But then investors are adapting different strategies to meet that, depending on their risk reward profile, depending on their opportunity for investing.
You mentioned the innovation that's happening. Think of things like the automobile market, electric vehicles, renewable energy. Those things are certainly familiar to a lot of growth investors, but what other sectors have you found that are really showing promise for this sort of rapid growth?
Right. So renewable energy, wonderful sector, but it's pretty stable at this point, low risk, low returns. The sort of exciting areas where we're starting to see a lot of opportunity. Energy storage. Energy storage is becoming mainstream. We're starting to see storage solutions that are cheaper and more competitive. And then beyond that, the two sectors that are very exciting, but also, let me be honest, truly risky, and we don't know how they're going to play out as investors. One would be green hydrogen. This is production of hydrogen using renewable energy. This is a very exciting area for many reasons. One being that hydrogen is a really useful gas for decarbonizing the economy. You can use it in so many different ways and has zero emissions. The other reason it's exciting is there are many industries that can compete here. Many traditional companies, oil and gas companies, actually can show real leadership in this area. And the potential is global. So you see an extraordinary opportunity there for investment. But it's early days. Green hydrogen is very expensive. It's not yet competitive. The infrastructure isn't there. So this is a big question mark. And then if you want to look even further out and perhaps take even greater risk, but potentially even greater returns, the area of direct air capture. So there are emissions that are in the atmosphere. In fact, there are technologies today to remove those emissions in the atmosphere, literally capture the CO2 that's out of there and dispose of it permanently. And that, of course, offers great promise, right? If you want to address climate change, ultimately, you're going to have to remove some of the emissions from the atmosphere. These technologies do that. But today, they are extremely costly, and they're not nearly at scale. They're really small. Solving that challenge offers investors a very exciting opportunity, but this is very, very challenging.
Well, Bruce, thanks so much for your time today.
My pleasure. Nice to be on the show.
And you can read more of our coverage over at investors.com/ESG. For Investors Business Daily, I'm Alexis Garcia.